Welcome, everyone, to another edition of the Tony Sirianni podcast. I am thrilled to have my friend Fernando De Leon. He's the founder and CEO of Leon Capital. Thanks for being here. Appreciate it.
Thanks. Thanks for having me, Tony. I appreciate it.
You are welcome. So, what I love, Fernando, is that you have a really cool origin story, like Batman. And I think advisors really love to hear, a success story and how you got to where you are. Because I do want to talk about all the RIA stuff
Yeah.
and why you think that's a good investment. But just tell a little bit for folks who aren't aware, how you got here.
I mean, I don't know that it's that different from everybody else, that built a business, right? I mean,
Yeah.
you kind of rough it, you kind of figure out how to make something work. You build something out of nothing, and you take the resources that you have that are finite, and you figure it out.
Right.
And that's kind of our story. I think the one thing that we were, sort of vigilant and aggressively focused on was compounding capital. We started with very little amount of capital about 20 years ago. And that capital, I tried to find openings in either the GFC or in building businesses and creating value for society. And we built, at this point, almost 15 different businesses over that 20 years that have been focused on real estate, healthcare, and financial services. But the early years, man, the early days in real estate were pretty humble. I mean, we kind of did anything we could to figure out how to make money. And back then, when I had no capital, we would do things like, option a piece of land, change the
Right.
zoning, find partners that would contribute an asset where we could monetize value. And so it was pretty humble beginnings. And I grew up, in a pretty difficult part of the world along the Texas-Mexico border. And so I think, those formative years growing up in a place like that sort of made us very resilient and adaptive and constantly trying to find, see around corners to
Yeah.
build businesses.
Yeah. Well, how does it's interesting. I'm curious as to how that translated into investing in RIAs. In other words, what are some of the disciplines that you used in some of those other businesses? How do they apply to what you see in the RIA market?
Look, I think everything we've ever been investors in has come out of something else that we learned or we
Right.
invested in along the way, right? So from real estate, we learned in our shopping centers or in our commercial real estate, we saw multi-site healthcare, we saw the veterinary business, we saw the dental business, and we started, investing in it, then gradually scaling up businesses like specialty dental brands or City Vet. And so we built those businesses because we underwrote their credit and we underwrote their financial economics inside the four walls when they were our tenants. So we understood how to evaluate risk and returns and credit profile. So we were learners about healthcare that way. Then from healthcare, we started in the lending business because we needed to finance some of our patients and customers in our healthcare clinics.
Yeah.
So we got into the healthcare lending business. Then, we learned insurance because we were buyers of insurance in real estate. So we learned the insurance business, by necessity, and it was painful. And so we wanted to, kind of sort of cushion some of that pain. So we got into the insurance agency business. And we learned about the RIA business because oftentimes these businesses we were either a customer of an RIA as an individual or some of the executives in our businesses, or we started investing in them because these were people in our network, in our community, that had built a pretty substantial business. And I can get into, sort of, all the things that everybody knows about why it's such a great business, but I have sort of a historic, a view of where we are historically in the RIA business and why we like it. But we got into investing in that asset class or in that business because we could kind of relate to those founders of RIAs and say, okay, here's the pain, here's how we can help with, gathering assets, client.
So you see a similar investment disciplines across the pieces, and a little bit you see maybe yourself and some of the founders of these RIAs. I mean, it's the more entrepreneurial side of our business, because you do have wealth managers that work at large firms. They end up doing, they do a lot for you, and then you have these entrepreneurs who are sort of out there making it happen, sort of mini versions of Leon Capital, right? Just trying to push along.
Well, look, I mean, we've had partnerships for 15 years with RIAs and investment managers. And
Yeah.
in that time frame, these were people that looked like us. They built businesses like us. We understood them as founders, as operators. And
Yeah.
then also, we were helping them along those 15 years in recruiting people, in buying books of business, in succession questions that we were dealing with in some of our subsidiaries. And if we had a subsidiary in dental where we needed to deal with a retiring CEO or recruit people, we were helping these partners for a long period of time, help them scale this.
What are some of the more important characteristics that you look for? Like when you look at for somebody to invest with, my guess would be that you're a pretty personable guy. You and I get along pretty good. You got to look for somebody you can get along. What do you look for when you're looking for to make an investment in an entrepreneur? What do you need to see?
Look, I've always said that capitalism is tough but fair.
Right.
And so for people to properly
Mhm.
understand the power of compound interest, they have to understand time and actual returns, right? And so we always said, hey, if you have people that understand that power of compound interest over a multi-decade viewpoint, and they want to do that and create wealth for themselves, and they understand that mathematically alongside us, then those are the kinds of people that we want to be in the trenches with. If you want people that say, hey, you know what, I want to maximize my dollar and I want a high valuation tomorrow, and that's it. Just give me like
Right.
that. I want to take chips off the table, all that stuff. Like we're not interested, right? But if you want to build a business and you want to compound your wealth over a multi-decade period, then we're probably more aligned than not.
See, that brings up, you and I talked a little bit about the anti-private equity, the thoughts that you have. I think that's really interesting. Talk a little bit about that, because I think that jives in with what you're just talking about.
Well, people always want to label me the
Of
anti-private equity.
course, everyone, that's what's out there, and that's it's
I,
a challenge for advisors. How do I sort these groups? Because there's capital out there,
yeah,
Fernando. It's not
yeah, I
that
get
hard
it.
to find money today. So the question is, what kind of money do I want?
I get it. I mean, look, I am not anti-private equity. Look, I'm the staunchest capitalist in the
Right.
world, and private equity is a foundational part of capitalism. I think when you look, I think we just crossed the 10,000th
Yeah.
uh, private equity fund in the United States. So there are 10,000 options for you if you want a private equity option, right? I think we've been investing off our balance sheet. We invest, on a multi-decade view. Like I said, we've had partners for 15 years where can you imagine private equity like Jones?
No, I mean that's a huge difference, and I think some of it is. I think a little bit advisors don't understand all the times the way those things work. You know what I mean? That there's a
They
7 year
do.
thing here, and
I think they do, Tony. I think everybody in this business understands it. I think some people just want more money faster and don't want to take the long view. So I think, look, our private equity, there's no surprises, right? I mean, it's a consolidation playbook. If you have a $2 billion fund and that private equity fund has $2 billion, they're going to buy 40 platforms, and each one of those 40 platforms is going to make 20 acquisitions. So now you sold your company to a private equity fund that has 40 platforms that bought 30 deals each. It's 1,200 companies. Yours is in there, and
yeah.
it's owned by pension funds and the Crown Prince of Angola and all sorts of capital that is in that fund, and you're along for the ride, but you're not going to have the ability to build your business the way you want it, and everybody understands that. I think nobody is a child.
No, no, but I think there are some people who want to say mislead, but I think it's hard to get. Everyone says we want to be your partner. Hey, we're not. We're kinder. We're gentler. We're not gonna push you. But describing what you just described, of course they have to push it because they're not totally in control of anything at that point.
Right.
So I think you have some of that.
Yeah, well, so look, I think the we're taking this long-term view.
Right.
Um, there are plenty of options out there, but if we take we don't have to, when we're investing, we don't have to ask for permission. If you
Right.
take a multi-decade view, you're gonna have a different sort of approach to really compound interest and to wealth building. And everybody understands that because especially RIAs, they're dealing with folks that created wealth for themselves, building long-term value, and the consolidation playbook is just a different view. I think we're saying, look, if you want a family office, a holding company that's going to be your partner and help you scale, and at some point maybe there is an exit for you, and maybe that does fit. Who knows? I don't purport to know the future, but I do know that in order to create real long-term wealth, you have to take a multi-decade
Well,
compound interest view.
it's so, there are a lot of advisors too, again, on the other side of our marketplace, advisors that are in these larger, firms, the wirehouse firms, and, they've been moving over to independence in droves. And part of it is because those big firms are run on a quarterly basis, right? They're public companies and they have to, move for the quarter, and the advisor feels lost. The advisor is trying to make the decades long decision himself or his clients, right? That's his whole business.
Yeah, look, I think like you said earlier, there's a lot of capital out there, right? There's
Yeah.
public companies, there's consolidations, there's roll-ups, there's private equity funds. All of them have different timelines and all of them have different needs, right? Some have to be in and out in 3 or 4 years. Some have to be, longer, but sometimes they're public companies that have quarterly needs. I think I've seen more companies, die of having too much capital than not having enough. And I think when you have the discipline to really sort of harness finite resources, founders know that with finite resources you develop a muscle memory to make better asset allocation decisions, human capital decisions. If you have too much money, you're hiring people that maybe aren't going to help you. But if you have limited capital, man, every dollar counts and every person you bring on has to give you a big return on equity. So you're a lot more judicious with how you deploy your finite resources. And
Yeah.
that's kind of how we think about it.
Yeah, other people's money versus your own money, right? If you feel like it's your own money, you're always better with it. So that brings a point you said in the beginning I wanted to talk about, and you wanted to talk about how attractive the RIA market is and some of the factors you think that are sort of, you know, um, for you make it a good investment today. Like what are you seeing out there today? And look, advisors are worried about, is it overheated? What are the multiples going to be? How much longer could this last? I mean, that's on everybody, and because advisors are aging, right, Fernando? So they're
Yeah.
worried about these
Look, I think for me this is a really long answer, so bear with me.
things.
But it's got, I think everybody in this, in our circle of RIA and financial advisors understand all of the things that are happening
No.
in terms of the fundamentals. Here's what I think is interesting. I look at this and I say the United States is in a very specific moment in history where you come out of a from the Industrial Revolution to a post World War II period where there's this immense entrepreneurship,
Yeah.
innovation, and wealth formation. So the boomers that they came back from the war and built families and built great demographics. Those are the people that built a lot of companies, and there's a lot of value stored in those companies. The
Mhm.
value that's stored in those companies, sometimes it's been bequeathed to their children, sometimes it's still locked into those companies, sometimes it's been sold or taken public, but all of that wealth is from 1945 to 2025 is an 80-year sort of experiment in American capitalism where you have now a $30 trillion GDP economy, and it's got this amazing momentum, where it's reached the tipping point that you basically are just compounding wealth at the company at the country level, not even at a
Yeah.
company level, but at a country level, at a national level. That compound interest every year grows at $3 to $5 trillion of wealth that is created because we have two things. Number one is we already have enough capital to support all the new good ideas that come up. So you have this like vibrant entrepreneurship that happens in the United States. We have a banking system, we have a capital system that connects good ideas with money, and then those good ideas rise. No other country, many countries have a financial and a banking system. Europe has a great banking system. Nobody has the ability to support entrepreneurship the way we do. And Americans, we are builders, right? Like, you've got, if you look around the world, I don't know, China, do you really own anything? Europe has terrible demographics. Latin America has really unstable political climates. The United States has everything about capital, entrepreneurship, innovation, good ideas. A lot of people from all over the world that bring their good ideas here, and then you have a
Yeah.
capital system that supports that. So that creates wealth. So the RIAs, yes, they have a bunch of secular tailwinds that are going to make it really great for them for the next 20 years. But the system of entrepreneurship is going to continue to create wealth in the public markets, in the private markets, in new companies, and that's everything. That's tech companies, that's landscaping companies, that's financial services firms, that's insurance. There's millions of places where this value is created, and the RIA is the harvesting portion of that wealth formation. So where you harvest it is through financial advisors. And so of course for the next 20 or 30 years we're bullish on investing in that business.
I love that explanation because, I'm slightly patriotic myself, and I think that's a good sense of where we could be. Sometimes you need to take a step back and look at the sort of functionality of this country, which is completely unique and fantastic. And guys like us wouldn't be anywhere without it. Let's face it, right?
Yeah, your great grandparents came from Italy, to the New York area, and
By the way, they didn't leave Italy because they were dukes and duchesses. They were they were
exactly,
shoveling crap or whatever.
exactly.
So they're happy to be here.
That's right. And so there's a scrappiness about the United States. It's funny. Like I when I travel around the world, if you tell somebody, I came from nothing and I built a business,
Yeah.
you tell them that in Latin America, in Mexico, in India, in Europe, they look at you like something's wrong with you. You say that in the United States, there's nothing that is more celebrated than a rags to riches story in the United States. So that's a culture. That's a mentality that we have in this country that nobody else has.
Listen to me. I'm ending it on that. You know why? Because I'm like Jerry Lewis. That's a high note. I want to, I want to hit it. We have more to talk about. There's Leon Capital for advisors, all this stuff. But we'll do it. We'll do another call because I find this fascinating, Fernando. So, thank you for being here. I really appreciate it.
You got it, my friend. Happy to do it anytime.
All right, great.